Okay, good morning, everyone. My name is Alison Malkin, and I'd like to welcome you to another episode of Views from the Bridge. Today, I'm particularly excited because the gentleman we have being interviewed today is a gentleman who's been in the mortgage industry since 1988. He's been in retail, he's been in wholesale mortgages, he's pretty much done everything there is. But since 2010, he's really focused exclusively on rehabilitation loans. Why that's so important is that rehab loans are loans that enable people maybe could not buy the house they want to get a house that needs work, but they might not have the cash for. So anyway, we're going to talk to Charlie today. He's going to explain it to us with a twist, because in this market, for all of you buyers agents out there, as you well know, you have a client who can't afford quite what they want to get. They don't have the money to fix it, and prices have gone up so much. Where can we get a little extra money from them? So Charlie will be the one. So Charlie, let me start with the first question. Could you please tell us just a little bit more about you? I gave your background, but tell us more.
Yeah, you bet. Thanks for having me, by the way. It's my pleasure to be here with you guys. Great opportunity. I always like being with Greater Hartford Association of Realtors. So Alison, you aged me just a little bit. I'm in the business since 98.
98. It should have been 98.
Yeah. I was like, wow, you know, that
Sorry,
people would think I started when I was just a boy.
Yeah, but Charlie, I started in the mortgage business in 85. So there you go.
Well, there you have it. So yeah, in the business since 98, and like you said, you know, in 2010, I really found my niche, my specialty. It's where I found renovation mortgage lending. Right after the mortgage meltdown of 2008, you know, I had migrated over to the wholesale world, and then the world changed. In 2010, I really embraced renovation lending as a niche for myself, as a way to separate myself from the pack. Coming back into retail mortgage origination, I definitely needed something to make myself special, right? So since then, it's really been my specialty, and for the last 5 years, I oversee the renovation and construction lending division for Norcom Mortgage. I'm their senior vice president of renovation and construction lending, and I'm responsible for the business that we do quite a bit of the renovation mortgages. I do a lot of training of our staff. I do a lot of educating of our real estate partnerships around the state of Connecticut and other places. And I also continue to originate renovation mortgages as well, because it is what I do, and I love to do it. So yeah, that's where I end up today.
Well, no, and that's really exciting. And what brought us together for this particular format today is I had a set of clients, as you know, who have a very limited budget, and they kept coming across properties that needed rehab. But even with that, they still didn't have enough money. So the twist we're throwing in, and what I want you to spend a little time on, if you could, is how to do a CHFA time to own rehab loan. And that's what's so amazing for a huge segment of the population. Tell us how you do that.
Yeah, it's you said it. You know, it's CHFA with their own down payment assistance loan, and now they have on top of it the time to own forgivable down payment assistance mortgage that's providing home buyers in Connecticut with $25,000 or $50,000 worth of forgivable lending, down payment assistance that even can be applied toward their closing costs. It's a mortgage with it's a 10-year mortgage note with 0% interest rate and no payment. So people have been throwing around the term free money, and
yeah,
you know it's
yeah, I like what you're clarifying. Yes, exactly.
Yeah. Right. It's the closest thing to free money. It's a forgivable mortgage that it's forgiven completely after 10 years. Each year, 1/10 of the money that they're given is actually completely forgiven. So it's a pretty amazing product. You know, we talk about renovation mortgages. The catchphrases that I've been saying for so many years are, it's really the only mortgage product that exists that can actually help grow someone's business, whether you're a loan originator or a real estate agent. Buyers have the ability to purchase and improve or repair or upgrade or even expand all in one mortgage loan, all in one normal 30-year fixed mortgage.
Yep.
It's for every kind of buyer today. It's no longer just FHA 203K. There's conventional renovation mortgages available. But when we talk about CHFA and time to own in particular, we are able to tie that with an FHA 203K. And now we're not only able to include improvements or repairs or upgrades, but now we're also able to include down payment assistance. So it's pretty special. You asked how we get this to happen, right?
Right.
Side note, there are many CHFA lenders in the state of Connecticut. There are only 15, I think, maybe 16 today that have access to the time to own money. That is, you know, that's the loan. It's administered through CHFA on behalf of Connecticut Department of Housing.
So I want to talk about the process. Like for my particular buyers, you know, 175 was pretty much their limit. And if the property and they meet all the other qualifications for the time to own program, you know, in certain census tracts, that could bring them up to 225. Huge
Right.
difference. Huge difference. And so what would you say are some of the misconceptions realtors have about time to own? Obviously that it's free money, because there's nothing that's free, but close. What else would you say is a misconception?
Yeah. The misconception is that anyone that can do CHFA has access to it. There are certain lenders that have access to it. Again, we mentioned the 203K renovation mortgage, limited to who has access to that.
And can they see that on the CHFA website, who to go to? Okay,
you bet.
good.
Absolutely. And, you know, a great point that you make regarding misconceptions. Everyone needs to be sure they understand that, you know, a home buyer does need to meet all of the normal CHFA requirements, whether that's income limits or residency. For example, here's a big one, Alison. In order to be eligible for the time to own mortgage, which is that 25 or 50,000 forgivable money, they must have been a consistent and consecutive resident of the state for the last 3 years without any exception.
Right.
They don't necessarily have to be a first-time home buyer if they are purchasing in what CHFA refers to as a targeted area. So they're very specific, and that's beyond the time to own limitation. The time to own money, by the way, here's another misconception, is that it's only certain areas that have access to it. The truth is, the time to own money is available to every single address in the state of Connecticut. The only difference is whether they consider it a low, moderate, high, or very high opportunity area.
Exactly.
The high and the very high opportunity area is where they are able to get up to 50,000, and the others underneath high and very high are 25,000. CHFA has what they call an opportunity map right on their website at chfa.org, where an agent, most of my partners will come right to me and ask me, but an agent can go on their site and type in an address and within 30 seconds determine which area, how much money their buyer is eligible for.
Right.
The targeted area where I mentioned about first-time home buyer, that's a different target, and they also have a list on their site that describes the targeted area. Targeted area means they don't necessarily have to be a first-time home buyer, and when purchasing in a targeted area, they actually are even eligible for a lower interest rate than the normal low CHFA rate. They get an additional quarter point off the rate.
Right. So that's really exciting, and it's a huge opportunity. Listing agents. So one of the things that those of us who do represent buyers who are in this pool of people, what can you say to the listing agents that reassures them that this loan, this combo of loans and product is just as good as somebody putting 20% down?
That's a really good question. Couple of reasons that come to mind. First, when we're talking about the time to own money, again, it's usable as either down payment or closing cost money. So they can use up to 5% of that time to own money toward their closing costs, and then they can use the remainder of that money toward their actual mortgage, to lower their mortgage toward their down payment, and then additionally to lower the mortgage even further. So we have a lot of home buyers who are able to put down larger deposits on their contracts because they're not using their own funds for down payment or for closing costs. Makes for a strong buyer, right? Secondly, if a lender is a CHFA lender, they've been through it many times with CHFA. If they were chosen to do the time to own function as well, they're a well-respected and well-liked CHFA lender, right, and they really know how to do it. So we could get it done in a normal time frame. And when we combine, my specialty, of renovation lending, and we talk about the 203K mortgage in conjunction, another thing we've been talking a lot about with listing agents today is that with an FHA 203K mortgage, there's actually also a built-in value cushion actually built in that has become more and more important to everyone today, with people obviously making offers and making purchases above asking price. When someone is doing a 203K renovation loan, it's not only is the home's value based on the after completed value, so whatever improvement they're including, that's how the appraisal is done, which is amazing. But there's also an extra 10% cushion that FHA themselves build into a 203K. So if a home appraises as a 203K at $200,000, the underwriter actually sees it as 220.
Which is huge, because that gives these buyers an ability to compete on a much more level playing field with people who do have that extra cash. Absolutely. So that's part of what got me so excited about this.
Yeah.
Let's talk about process. I've heard, and I've done them, so I love them. But for someone who hasn't, a lot of people say, oh my goodness, they're so difficult. There's so much paperwork. How do you get the contractors to fill it out? Tell them what you told me when I wanted to know, what the process was these days. Yeah.
So the process kind of across the board, there's different lenders, obviously, who handle these renovation products differently. Not all lenders handle the entire transaction in-house, so post-closing. So I always say when I'm out educating and teaching, I teach continuing education classes for realtors through the different boards like GHAR. One of the things I always say is, regardless of who you're going to work with a product like this, ask them not how many, not if they do renovation mortgages, but how many they've done and if they handle it all themselves in-house. That becomes a big key. But to your question about contractors, all of the lenders that handle these are going to require a contractor to fill out a small packet of paperwork that basically includes a one-page resume, gives them some references, their licensure, their Connecticut state license, and their insurance, and then some basic agreements between themselves, the contractor, and the homeowner, the home buyer, so that everyone's on the same page from the very beginning right on through the renovation. Honestly, it's gotten to the point where it's honestly a 10-minute process for a contractor to take care of.
Nice.
There will always be contractors who are anti-paperwork.
Yes, indeed.
Like any industry, right? However, the products have been around so long now, and have become so many lenders that do offer the product. They've become kind of common in the marketplace, and more contractors are understanding how it works, understanding how little paperwork is required for the lender to accept them as an acceptable contractor. And then there are different processes for the distribution of the funds to the contractor. The most common on a 203K, what we call a 203K limited transaction, which most realtors would probably be more familiar with, where it's less involved and less than $35,000 in renovation and no structural work. We're actually able to to provide the contractor with half of their bid right up front, right at the closing table, so the contractor can get started with more money in hand than even a contractor who's not involved in a renovation mortgage. So it's actually made it a lot easier for contractors
Absolutely.
who want to jump on board,
Absolutely. So for those who have never done it, let's the day in the life of a realtor. So for someone who's never helped a client through this process, so these houses, some of them are foreclosures, but some of them are just dated houses that need work. It could be, anything. How do they sort of go in, figure out what to do? I mean, do they bring a contractor with them to start with? Do they eyeball it? Do they have what would you advise a realtor to do?
Yeah.
Process.
So I'll answer that with yes. All of the above. All of the above. There's no set exact way. You mentioned sometimes going into a property and eyeballing it. There was a time where you probably remember, Allison, where people actually had second showings, actually got a second.
Long time ago.
Yeah, back in the day when you could get a second look at a home.
Right.
What is most common in my world, in the renovation mortgage world, is a lot of times, well, first off, a lender will pre-approve a home buyer based on the total amount, the total acquisition of a property. And the way to make sense of that is, we pre-approve a home buyer based on their comfort level, meaning what they want their mortgage to look like, how much they want for a mortgage payment. This is how we help somebody to get ready to go shop for a house, right?
Right.
With a renovation mortgage, we do the same thing, but then we tell them, okay, you're pre-approved. This is your number, wherever they're comfortable, whatever they qualify for. Now you can shop backwards. I steal that term from Chip and Joanna Gaines on Fixer Up.
Yes, I love them.
Everybody does, right? We say shop backwards. If you're pre-approved for a $300,000 loan, now you could look at homes that are perfect walk-in turnkey ready for $300,000, but you could also go now look at homes for $275,000 or $250,000 or $230,000 or $210,000 or whatever the number is, and now you've been able to identify your renovation budget, so to speak, right? One of the secrets and one of the best tips I can give when I'm talking to real estate agents is when someone goes under contract, the best move is to use a home inspector during the home inspection part of the process. Use a home inspector that is actually a renovation inspection consultant, and they're all over the place. And this is who they are by trade. They're home inspectors, but they also get involved in some of the renovation mortgages. That individual can get an eye on the property, and because of what they're certified in as far as inspection consulting, they can even attach pricing and give estimates to people even before a contractor has been identified. So I said, there's a lot of ways of handling it. We can look at a home and we can kind of eyeball what we think it may need. We can walk into an open house and bring a contractor along with us, or we can wait until we're under contract and we can bring in a home inspector with the right training, or even bring in a contractor at that point and get an idea. In order to move forward and complete our transaction, the only thing that makes these transactions any different than any other is that we have a contractor, his estimate, so that we can have the home appraised based on that estimate and the after
what's
improvement.
being done. Yeah.
Yep. Other than that, it's a normal mortgage process right on through.
So as you know, with me, I have contractors who I trust and have worked with for years. And so that's my process. I sort of bring them along and say, okay, let's take a look. For those who don't, do you have, and not just you, any mortgage lender who does the rehab loans, will they have like lists of people for people who don't have contractors? Or let's say mine isn't available for my person. Do you have lists of people who you would trust to do a good job?
That's another great question. And that also, by the way, it kind of leads me into one of those other misconceptions that I talk about a lot with agents. So lenders will have their recommendations. As a lender, it can certainly be a conflict of interest for us to recommend or refer a contractor, because you can't make everybody is not always going to like the same person. You can't please all the people all the time.
Right.
However, lenders that have expertise in this can certainly give advice and say, listen, we've worked with this individual and that individual multiple times, and they've always done a great job, and they understand the process and they know what to expect. So I'll give a list, not a published list, from ourselves as a lender, but I'll give multiple names sometimes, like we would with an attorney, or anything else, where we can say, you choose who you like, you interview, and you make sure you do your due diligence. But I can definitely say, I can help you identify someone who's done a good job. One other piece of that is those inspection consultants that I mentioned that are home inspectors by trade.
Right.
A lender is allowed to recommend or deny the use of a particular inspector because they give us the authority, the agencies give us that authority. Those guys can be the absolute greatest connection to the contractors because they're tied in with them as they do the job. The misconception I was going to mention, that misconception was that there's a specific identification of a contractor that they need to meet a certain list, a 203K list. There is no actual list at all. It's any contractor in the state that is licensed and insured that a lender feels is going to do a good job.
Okay, so that makes total sense. What do you think the biggest mistake, so this is different from misconception, that you have seen realtors either in how they relay a discussion they had with their client, or you're talking to the borrower and find out they were told something? What's the biggest mistakes you see with the rehab approach?
Honestly, the wrong partnership. That's the truth. The wrong lender, someone who doesn't do them on a consistent basis, someone who's kind of just dipping their foot in the water.
Right.
Having the expertise is really the most important. So identifying a lender that has experience. And then honestly, one of the biggest mistakes I do see is home buyers not including enough or as much as they wanted to at the beginning, because adding $10,000 of funding into a mortgage, even with rates where they are today, even with rates approaching 7%, adding $10,000 into a 30-year mortgage, the payment's not going to go up very much, maybe $70 or $75. So when we explain it that way to a home buyer and we say to them, are you sure you don't want to include maybe new appliances while you're at it? Are you sure you're not interested in, maybe you mentioned the countertops,
Right.
Maybe you want to do that now because you're never going to find a less expensive option to finance the things that you're going to want in your house.
Absolutely. And that actually holds over from back in the 80s when I did them. So yeah, it makes complete sense to me. Well, I love the fact that we could do the time to own, CHFA, DAP, and the rehab. I think that makes a huge difference for people. Obviously, we don't know how long the time to own money is going to be around, but while it is, it's great. But even that, the rehab is such an opportunity for everybody. I agree.
It really
anything else you want to tell us realtors out here, whether they're buying agents, listing agents, or what?
I'll just say that honestly, I mentioned at the very beginning, the renovation mortgages in particular are truly, and I've been saying this for since 2010. It's really the only actual mortgage that can help an agent actually grow their business in any market. And that's always been the case because we're able to provide more options for people. They can start to look at additional properties and maybe things they hadn't thought of, if it's in the right location, of course. But, I'll leave you with this. In this current market, we all know what we're dealing with right now, the I word, inventory. It's a challenge for every single one of us. And this is the only option out there that we can actually use to help expand housing inventory. Because,
absolutely,
right, if we're providing more options for people, and we're saying, listen, you can qualify and include renovation. You don't necessarily have to stretch as far as you thought. You could look at other properties, maybe some homes that maybe are in need of improvement or upgrade, and there's less competition on those houses.
I just want to thank you so much for taking the time out to talk about this. I am beyond excited, as you know, about this product because I want to take care of my people and this is a way I can help them. So it's great.
You
Other
bet.
than that, that's all I can think of for today. And I want to thank you and I want to thank everybody for tuning in to View from the Bridge. Have a great day.